So you want to be a successful trader. You want to make money in the stock market. You want to become a profitable trader. And I've been doing this for 30 years and I've kept it simple in the markets. I know how to keep it simple. I've done this for a long time and I'm going to show you in the charts today how you can keep it simple. I'm going to take you to the charts and I'm going to show you a technical strategy that can work for you, the same strategy that's worked for me for a number of years, and nothing changes in the stock market, guys. No matter how many times everybody tells you that the market changes and you've got to change your system every 5 minutes, that's the last thing you want to do. You do not want to change your system every 5 minutes. You just want to use the same basic old system that I've used for the last 30 years to make you profitable in the stock market. So come along with me today and let me go and show you how you can actually become profitable in the stock market. And it's not a rocket science. It's not something really difficult. You don't have to learn how to re-engineer a bridge. You don't have to learn how to become a doctor. You don't have to learn how to become an engineer or a lawyer. Well, that said, you wouldn't want to go to a lawyer who studied for one day and said, well, I'm going to defend you in court now. You would like him to have a little bit of experience. So in the markets, unfortunately, you are going to have to gain a little bit of experience before you can be a great trader, before you can have that strategy that's going to make you loads of money. By the way, guys, just for info, I am going to do the Funded Trader Challenge with you guys soon. Probably at the beginning of next month, which is like next week. So, no big deal. We're going to get together. We're going to do this whole thing together and we're going to have a little bit of fun. I hope you guys are going to join me. I'm going to try and do a couple of live shows with us, and we're going to actually see if we can succeed with a Funded Trader Challenge. Can we actually pass one of those challenges? Is it possible for someone with my experience to even pass one of these challenges? Wouldn't that be interesting to figure out? Because I've never taken a Funded Trader Challenge. I've never done one of these things. I've always just traded with my own dosh. So let's see if we can do it with their dosh. Let's have a bit of fun, just to see if it's possible, because a lot of you guys have mentioned that you're doing these Funded Trader Challenges. A lot of you guys have mentioned there's a few technicalities that maybe I don't know, and I just feel that I really need to know what those technicalities are. If there is a problem with stop loss, somebody's mentioned, but I can't put my stop loss out there because I'm going to get into drawdown or whatever the case. I want to see how this all works. And I want to see if it's actually possible to pass one of these challenges with our old, simple, archaic, fossilized system that I use on a daily basis, and a system that's always worked for me. But guys, we're going to go to the charts and we're going to go and have a look. But before we go there, guys, just remember, trading is risky. 80% of traders do lose money. And if you don't like losing money and you don't like risk, rather choose another form of employment, let's say, because you don't want to be trading if you don't like risk and you don't like the possibility of losing any money. After we've been to the charts, guys, I'm going to show you your free gift that you can go and get, and I'll tell you all about the trades of the day and that sort of thing. So let's go and have a look at the charts first. Let's go and see how you can trade with this system that'll keep you profitable or make you profitable one way or another. Let's check it out. Go for it. To being successful in the stock market, very much understanding how to manage your risk, understanding that the stock market is a 50-50 game. If you take a long trade, someone's selling, someone's taking a short trade against your trade. So it's not always as simple as winning a trade every single time because you think you've got the edge. Everybody thinks they've got the edge. If you look at gold, there's market structure, up, down, up, down, up, down, up. This is a long trade because it's running along the support here, and you're taking a long trade based on the fact that it's bounced off that and it's going up. But keep one thing in mind, guys. You have to manage your risk, because while you have an edge here, while you believe you have an edge here, somebody else has got a different system that's telling you that you might be wrong. So what you have to do is take a stop loss and put it in this area here, just below that low and just below this support. You can actually put it just below the support anywhere in this area, just to say the trade is invalid if it reaches that area, and it's most likely going to go short. Now, if you go and take a look at, for example, something like the US 500, where we stand at the moment, and this is a trade that I actually lost out on. This is the exact trade that I lost out on, By the time you see this chart, this will have expired. But this is a trade that I lost out on, so I'm just using it as an example so that you can see what happened. I went against the trend, which is totally against our trading method and against our trading system, but that doesn't really matter at the end of the day. I took my levels from the day. There's my resistance, there's my support. I saw it coming out of the resistance and I looked at it and I took the trade too early because you're supposed to wait for the candle to close. But had I waited for the candle to close, I would have lost anyway in this case. But my whole point was take the short, put the stop loss up here. It was at 56.75. Stop loss was here. And when it got down to this level here, I actually didn't add to the trade, but I did move my stop loss down to cost, which was 56.20. I made 50 pence on this trade, let's be honest. So I put my stop loss back down here with a view to continue on down. And if it had gone further, I would have added to the trade at a lower level around here. I was planning to add to the trade on the next red candle, because on the next red candle, I would have had confirmation. But what happened? There was some news in the markets, turned it around and it went back. But it went back, it took out my stop loss. But that said, it took out a stop loss that was very much in profit or break even. So I didn't lose any money on this particular trade. And that's what's called managing your risk. Even if I had taken this trade and put my stop loss at 56.75 and it had gone the other way and taken it out, then I would have lost the money that I was prepared to lose on the day on that particular trade, and it would have cost me that amount of money. In this case, what I did, it went into a decent profit, and I took the same distance in my profit that I had my stop loss away and said, well, now this is the same length as my stop loss was from my cost. So now I'm moving my stop loss into my cost area, and then my stop loss is still the same distance away as it was at the start of the trade while I was in profit. But then I lost all that profit. It doesn't really matter. I still broke even on the day, and I didn't lose any money on this particular trade. That's how you make money in the stock market. Because had this trade gone for us, had this trade gone in our favor, we would have added to the trade here. It would have gone to this level. It would have been a really large profit. Your stop loss would have been in this area here. And had it gone back, you would have made a profit. Had it gone through here and you'd add to the trade again, your stop loss would have been even further down and you would have had even more profit in the bag, and so on and so on and so on. What you want to do is you want to follow this trade down as far as you possibly can and make as much profit as you possibly can on the trade. Let's take another example. What other example can we have? Let's go for the Euro, Great British Pound. Nice Forex trade. You see, here's another prime example of a trade where you just need to manage your risk. So you want to take a short at this level. We're sitting here now. It's going to come back, retest here. You're going to get a red candle out and you're going to take a short down to here. You're going to put your stop loss at this level around the 85.28, just above the resistance, just in case it goes the other way, which it shouldn't if you've got a red candle here. And then you're going to follow it down. And when it gets to a reasonable level down here, you can add to the trade. But when it gets to the same distance away as where your stop loss is, you can just move your stop loss down into the cost. That way, if it does turn back, it's just going to take out your stop loss. And then it's the same distance. No matter what, you've still got to travel that distance to get to your stop loss. So don't worry about that. Once it gets down to a reasonable level, you might want to add to the trade, or you might want to see where it's going, but you'll move your stop loss down a little bit further again, just in case it bounces back on you. But don't take off the trade, add to the trade. Don't take away from the trade, add to the trade. For example, if this was a long trade over here, it would have broken through. You had a red candle, you didn't do anything, you got a green candle. On that green candle, you take your long. You put your stop loss down over here. This thing moves up and you add to the trade. And then you move your stop loss up to your cost area or a little bit higher, and then it moves up some more. And then you look at that and you think, should I add to the trade, depending on what's on the left here? And you work according to that. But you move your stop loss up, and then it moves and it moves and it moves. It takes out your stop loss. You've made all that profit no matter what the situation. And that's how you take your trades. It's not that complicated that you should like invent rocket science around it. It's just a question of keeping the trades even and, moving your stop loss down and following the trade down. Because look at these long moves. You see these long moves on the US dollar CAD. If you had taken it short here and you got out of the short here, look at all that profit you would have lost. Whereas if you just moved your stop loss down a bit and then followed it down and moved your stop loss down a bit more and followed it down and moved your stop loss down a bit more and followed it down, you just keep your stop loss at the same level you had it from from the point of entry. So for example, if your stop loss was 20 points away, just keep your stop loss 20 points away all the way down, and then you just keep on making that profit all the way down. And when you get areas where you can see there's definitely a place where you can make a profit, where you can put a support line in or a resistance line, or it hits a trend resistance or something like that, and it's continuing on down or up, whichever way, then just add to the trade at that point, make the trade a little bit bigger because you're in profit, keep the stop loss down, and just follow it down until it makes you all the profit that you require for that particular trade. It's all about managing the risk, and it's all about understanding that the market is 50-50. It can go either way. No matter what the situation, no matter what your system, no matter what you're trading, no matter what moon's shining on the day or whatever the case, some people will be buying, some people will be selling. And it's all about understanding that. And if you understand that, then all you have to do is manage how much loss you're going to be taking. Now, it's only the first part of the trade that's going to affect you. So when you take the trade for the first time, let's say you were at this point, you saw this long tail on this, what looks almost like an inverted hammer, but there's a long tail here, and you think to yourself, well, there's a big red candle, and you think, I'm going to go short here. So you take this short right here, and you think, well, this candle's closed, I'm taking this short. Now, the first thing that happens to you on the next candle is it goes up. It goes against you. The trade actually goes against you. Now, you can either panic and get out of the trade, or you can abide by your rules and say, well, I've put a stop loss up here, and I'll only get out of the trade if it goes up, takes out that stop loss. And that stop loss is at that level. But then the trade starts going for you, and it goes back up, and then it goes for you. But now at this point, the trade is still in your favor, but it's all the way down here. And it's almost the same length, or it is the same length as where you got into the trade. It's the same length down here. And I'll probably be at this candle, the same length as your original stop loss. Then bring that stop loss down to that level, down to that cost level that you got into the trade at, and then you've still got all that distance down to there. And then if it goes back, it simply takes out your stop loss at a break even, and you haven't lost anything. But if it carries on down, like in this event, then you're making profit, and there's points here where you can add to the trade. So I hope that gives you a little bit of insight into my 50-50, because it's just as simple as you've got every chance of winning in the stock market, but you also have every chance of losing. And the more you understand that you have every chance of losing, the more you'll worry about the risk factor rather than the profit factor. The profit will take care of itself, but you have to take care of the risk, because that's the important part. Because if you let the risk run, your account will get blown up, taken away. If you're in prop firm trading, for example, you've got a maximum amount of drawdown that you can take. And if you go through that, you're going to lose your account. It's as simple as that. So you can't play around with that, guys. You've got to watch that. So that's the charts. You've seen the charts. Now you know what we do on a daily basis to make money. Now, I'll use the support and resistance. I'll use the supply and demand, but I'll always keep it simple. In the old days, we used to draw the lines in with pencils. You know, if we drew a trend line, we drew it in with a pencil. And we didn't even draw blocks in. I mean, it's great to have all this wonderful, fantastic, great technology that we've got now, such as cell phones, computers, and algorithms and robots. And where are we going? Wow, goodness me. One of these days, I won't even have to trade. I'll just get up in the morning and my robot will have done it for me, man. It's absolutely brilliant, isn't it? But that said, guys, you have to know how to do it. You have to understand what you're doing before you get out there and you actually start doing it. You have to understand the 50-50 concept. The concept of 50-50, which I know a lot of you are not grasping 100% and you're not agreeing with me on this yet, but you will. You'll understand it soon. And the concept is rather simple. The first thing you have to understand, to keep it simple, is that there are a whole load of buyers and there are a whole load of sellers in the market. You're not buying your stock from a company. You're not buying your stock from a pool. You're buying your stock because someone else is selling their stock, or you're selling your stock and someone else is buying your stock, right? And I hope that kind of sort of makes sense. So what you actually got is a situation of someone who believes because their system has told them so, or because their knowledge has told them so, or because they're looking at a technical chart, that they're going to buy. They're now going to buy 50 shares in this company or index, or they're going to buy this Forex because they believe that in their minds it's going to go up. And there's someone out there who's willing to sell you that 50 because they believe from their system and from their beliefs that it's going to go down. Both of you believe that you've got an edge in the market. Both of you believe you've got the best strategy in the world. And both of you believe you're going to win. Now, this is where it gets tricky. Now, you both believe that you've got an edge that's giving you an 80% edge in the market, that you're going to win 8 trades out of 10. And anybody who believes that is sadly mistaken, because you're not. No matter what you do, no matter what system you've got, no matter what system you use, you are always, and I mean always, going to sit with a 50-50 chance of winning or losing. And this is why I reiterate my strategy to win or lose in the stock market, which is have a set amount that you're prepared to risk on every single trade. Small amount, a big amount, doesn't matter, a set amount. That amount is the amount of money that you are prepared to pay for that trade. Let's say it's $500. I don't mind whatever amount it. Now, if you lose, you lose. You take the loss, you walk away. If you win, you add to the win, but you don't want to win $500 on each trade. You want to win at least $1,000 on each $500 trade. In other words, you want at least a 2-to-1 on each trade. And if you can, possibly make even more profit than that. And as I showed you in the charts, just move your stop losses up so that you don't take those $500 losses. You don't need to take the full loss if you don't have to. If there's a way out, rather take the way out. Keep the losses as small as possible. Failed trades, you're going to have loads of failed trades. Believe me, guys, if you don't have failed trades, you're not trading. You've got to have loads of failed trades. I know traders who lose 8 out of 10 trades. 8 out of 10 trades, yet they make massive profits because the 2 trades that they make a profit on are absolute boomers. They make so much money on those 2 trades, and the rest of the trades are tiny little nitpicking losses. Whereas what you're doing is you're trying to win 8 out of 10 trades, but those 8 trades are those guys' losses. Now think about this, the buy and sell that I just told you about. What am I getting at? Those are the guys you traded against. And you won those 8 trades. You won a tiny little amount off them. Tiny little amount. And the 2 trades that you lost were the big ones that they made a fortune on. They took all the money. So you can go around and boast to all your mates that you've got a system that wins 8 out of 10 trades. But the 8 out of 10 trades that you won were minuscule. And it's easy to do that. I can do that every day, guys. I can put a system out here that will win 9 times out of 10 because every time I go into a profit, I'll take a profit and walk away. And I'll win 9 times out of 10 because any system can do that. The minute it's in a profit, I click sell, I've made a profit. The minute it goes into a profit, I click sell, I've made a profit. And it's a tiny little minuscule profit. It's a waste of time because when I lose, it like really takes me out the game and shifts me off to the side and blows the account and whatever the case. So you see what I'm getting at here? I'm trying to point out to you guys that you've got to make big wins and take small losses. Follow the wins, don't follow the losses. Don't follow the loss down to the pits and try and follow the wins up to the sky. Reach for the stars, as they say. Reach for the stars. But I'm rambling on now, guys. The free gift is, don't forget, go down to the description. Go and get your Forex book, your free Forex book, which is there for you. It's totally free. It's a PDF. Just download it, enjoy it. And it's all about trends and that sort of thing. So that's for you. That's on the house. Every day, put out a trade of the day for you guys. Trade of the day is there just to help you along. It's just a trading idea. It's not trading advice. I'm not here to give you trading advice. I'm here to show you how to trade. But if you want to use that, you're more than welcome to. It's there. It's a trade of the day. It's on the blog. It's a free blog. I don't pay for the blog. It's just there. Enjoy it. It's great. As well as the fact that if you do want a little bit more integral stuff, more a video, I put a video out every day and I put like a whole bunch of trades together and that sort of thing. But I've actually allowed YouTube to put the members thing on there, and if you join the membership you'll get that, because that is a lot of extra work out of my day. And there's a thing coming up with when I do the Funded Trader Challenge. I am going to be giving a couple of challenges away. I'm just working out how I'm going to do that within the guidelines, the YouTube policies and that sort of thing. So I got to figure that out, but someone's going to get a couple of challenges somewhere down the line, and we'll work that out for you. But I'm sure one of you would want a free challenge somewhere. But guys, thanks for watching. And the next video, which is coming out on the weekend will be regarding what's happened through the week and what's happening next week. And we'll go over a couple of Forex trades, and we'll go over a couple of indexes, and we'll go over a couple of commodities. As usual, if you've got any special requests on any specific equity investment or anything like that that you'd like me to talk about, we can do that as well. So guys, thanks for watching. Don't forget to watch the last videos and the next videos. Till next time, cheers, thanks, and bye.